What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today we had a very interesting day in the stock market, and we had a very volatile sell-off across the board. What's going on in the stock market, and what should you expect going into tomorrow? Tonight's episode is going to be very educational, and I'm going to have a lot of details, so you're not going to want to miss out on anything. First up, we're going to do it a little different, and we're actually going to take a look at the NASDAQ 100 triple Qs first. So let's crack open this chart and see what's going on in the stock market today. Alright, so remember, we're looking at the triple Qs NASDAQ 100 first. And there's a very important thing I want to talk about with that ABC correction that I'm talking about, because we're definitely going through a tech correction, and it's actually bringing down the S&P 500 with it. We saw a very volatile day today, and we did see the triple Qs going down negative 3.5%. And we're closing right on top of support, which is right around this 313 level. Okay, so we're going to get into a little bit of Elliott Wave analysis tonight to explain what to expect in the market. So I got to switch over here to a 1 hour chart, and we can definitely see that from the highs, I did have the NASDAQ 100 triple Qs finishing out a fifth wave, which means we're going to go through a correction cycle. Now, a correction cycle looks like that ABC that we talked about the last couple of nights, but I want to give you more detail on what to expect with this pattern. So the first thing you need to know is that we're going down in this A wave, and I do have reason to believe that the A wave completed with today's price action. So the reason I say that is I can count 5 waves down in this market. We had wave 1, we bounced for wave 2, we came down for wave 3, we bounced back up to complete wave 4, and now we're back to finishing out wave 5 down here, which actually finishes out wave A. So remember, this is on a 1 hour time scale. So it gives you a little more clarity on what's going on beneath the surface, because on a daily chart, it's not quite as easy to see these waves. So on an ABC, you can see here that we go down on the A wave in 5 smaller Elliott waves, which is what I just showed you on the 1 hour chart. So from here, we can actually expect to see a relief rally, B wave bounce, and we will expect to see it going up in 3 waves for wave B. Now after that, that's the possibility of a bull trap, where everybody's going to think the market's going back up to brand new all-time highs just in time for wave C to potentially start, and we'll go back down in another potential 5 waves for a wave C. So right now, I want you to focus on what's in front of us, and right now what's in front of us is that we likely bottomed out in wave A, and we're going to bounce into wave B. So this is not the time to be buying puts, and this is not the time to be panic selling, because we're actually due for a relief rally off of these lows. So I'm going to go ahead and delete these waves now that you've seen the 5 wave structure to the downside, and I want to switch back over to a daily chart. So going back to the daily chart, you can now see that we finished this wave A as I just showed you on the 1 hour chart, and we're due for a wave B bounce. The wave B bounce is probably going to take us back up to the 325 level, and it's even possible we go as high as 327 or 328. However, if you're trying to be risk off and you're trying to reduce your risk in this market, it's very possible that you're going to want to sell earlier, right around 323 or 324. So 325 and 327 are where I'm going to go ahead and put this wave B bounce, but obviously do what fits your risk management, because there's no guarantee that the B wave has to bounce all the way back up to these levels. Now at that point in time, we will assess whether or not we think this is going to be the bull trap and we're going back into a wave C, or if we start blasting above these price targets and we get back above the 20 simple moving average and this level, let's go ahead and just call it 328, there's still the possibility we go back into a bull trend and we continue to form new all-time highs. But right now, I'm favoring this tech correction ABC move, because we did go up very far from the March lows, and this market is due for a correction. Typically, these corrections last about 3 to 4 weeks, and by tomorrow, you can go ahead and say that we're into week 2. So while this is painful, it will be over in the next couple of weeks, and it will play out very quickly. So we're going to continue to cover this ABC theme until this correction is over. And just remember that if you're not doing well during this correction, it's always a good idea, if you're losing money, to just walk away from your trading account and come back to your trading when things are a lot less volatile and this correction is over. Usually in these moves, a lot of rookie investors get whipsawed, and they're constantly switching back and forth from being long and short, and they're timing everything at the worst possible time, and they're losing money in both directions. You want to have a very disciplined approach, and you want to know exactly where you're comfortable buying and where you're comfortable selling. Corrections like this are not the time that you want to be taking on a ton of risk, and you don't want to be taking on a ton of leverage, because it is possible volatility is going to remain in this market until this correction and this sector rotation are finally over. All right, so let's take a quick look at this chart and figure out exactly where our support levels are and where our resistance levels are. As I just showed you with the ABC, it is likely that the A wave is bottoming out right around 313, and we also did see resistance for 2 days in a row around 311. Now, I don't want you to get overly confident that wave A is complete until we see tomorrow's price action, because it is still possible that wave A goes lower and we could come back down to the support level right around 308. So watch that level as well, because if wave A continues to extend to the downside, it is possible that we have to go lower before we can go higher. So right now with the price action that we do have support right around 313, 311, and 308, and the resistance is going to be above around 319, 323, 325, and of course 326 all the way up to 327. So there is still a ton of resistance above, and we're also very close to support levels below. So this market's going to remain volatile, and you're going to see huge swings in either direction, so be prepared for that. But ultimately, look out for that B wave bounce, which should be coming very soon. All right, next up is the S&P 500 Spy Etf, and we did see the S&P 500 going down negative 2.4%, and we did close above support at 381. You could see that we haven't yet tested that 50 EMA, and we still have the open gap at 377. Just like I said with the tech sector, we are going down in an ABC fashion, and you can see on the S&P 500, we're holding up a lot stronger because the S&P 500 also has a lot of those other sectors like financials and industrials that are helping keep it higher while the tech sector sells off. So remember, the theme of this week was a sector rotation where we saw a lot of money leaving the tech sector and leaving the healthcare sector and flowing into energy, financials, and industrials. Now on a day like today, we saw selling across the board, and that's just completely normal volatility when we see these corrections and these sector rotations. There's always going to be panic selling and money moving around, which honestly just causes volatility and it just causes chaos. It's short-lived, and once it's over, the market will return back to a healthy bull trend as long as the correction isn't going into something deeper. So right now we're just playing it day by day, and we're going to continue watching these critical support levels. So on SPY, watch 381, the 50 EMA around 379, and then the gap close below at 377. Those are likely going to be the most critical support levels that you need to pay attention to. Resistance above is going to be at 389 and at the previous all-time high, which is right around 393. Remember, we need to break back above 393 before we get overly bullish on this market. We could definitely see some bearish trending building up on SPY, and we already know that we have bearish trending on the NASDAQ 100. So as long as we have bearish trending in the indices, we want to be defensive and we don't want to get overly bullish because the correction could still go much lower. Even in the event that we see a bounce, we need to handle that bounce as a time to reduce some risk because it's possible we do go down for another leg lower. Remember that typically in bear trends, gaps get filled, and now that we're starting to form bearish trending on SPY, it's very possible that this gap is going to get filled at 377 when we go down for that C wave down, which is the next leg lower. So even if we bounce from here, let's just say we bounce up to 389 and find resistance, we're likely going to finish out that C wave that I showed you on the NASDAQ 100 and maybe even possibly come past this gap at 377, but we would expect to at least close that gap at 377. Now, once that happens, we'll talk about other scenarios, but right now, just be prepared for a relief rally bounce and then possibly another leg lower. On the Dow Jones, we went down negative 1.74%, and remember that the Dow Jones is outperforming the S&P 500 and the NASDAQ 100. We held up above support very well on the Dow, holding up above the support level at 313, and we're still in a bull trend with all of the moving averages still stacked to the bull side. So the Dow, even though it did go lower today, it's still looking very bullish, and it looks like it's going to have no trouble hitting our price target up here at 322. Remember that the relief rally is likely coming for the tech sector, which is bound to boost the S&P 500 as well. So the Dow Jones is likely going to hit my price target at 322 at the same time that the tech sector is hitting its price targets on that B wave up. So remember, if you're watching my videos this week, all of these price targets are coming to a head, and that is a very significant event because it could lead to more selling. So we're not out of the woods yet, and there's still going to be plenty of volatility over the next coming weeks. So don't get overly confident and be prepared for any market conditions. I'm not saying that we have to see more selling. I'm just saying that it's very likely. On the Arkk ETF, we got absolutely routed, going down negative 6.37%. Now there's a lot of reasons that the Arkk ETFs are getting beat up so much, and that's because a lot of the FOMO stocks that people were chasing Cathie Wood's buys are the ones that are getting the most corrections and the most selling. So watch support levels on Arkk down here at 124. And if we do break below that support, it's still possible we come back and close this small gap, which is right around 117. So while I am bullish on the Arkk ETFs in the long term, there's still a lot of potential downside because these Arkk ETFs have a lot of correction that they have to go through before they will become healthy again and can start trending back higher. So don't be in a hurry to go all in this market. Let the volatility and the correction shake itself out, and eventually we'll see where the bottom is and we'll know when to go in. So still expect to see a very similar ABC bounce in the Arkk ETFs, just like we talked about with the NASDAQ 100. Resistance is going to be above at 135, 138, and 142. On the VIX, which is our fear indicator, we went up 35% and we blasted through and closed above both resistance levels. This goes hand in hand with the sell-off and the fear. So right now we want to be extremely defensive because this market is going to remain extremely volatile. Remember, in volatile markets, we can also go up a lot. So you don't want to just use all this information and think it's time to short because the VIX is higher. It's very possible we go up 2 to 3% tomorrow and absolutely destroy and short squeeze all of the short sellers. So don't get overly bearish, just play it day by day and get ready to watch that potential B wave bounce. You can see that the VIX is still forming lower highs until proven otherwise, and it's still possible we backtest this breakout as support before we go any higher. On the US dollar, we were pretty flat today, but you can see we're still in a bearish trend, and it does look like the US dollar is going to continue to trend down towards support at $89. On gold, we got destroyed today, going down negative 1.9% and closing below support at $17.76. It's now possible that gold is going to come back down to the previous lows around 1760s before finding support and potentially bouncing. The gold market is looking very weak lately, and it's not necessarily a great time to be trying to get into the gold market until we see it stabilize and start showing some bullish trending. On silver, however, we still have bullish trending and we're still holding up above a positive sloping 20 simple moving average. Silver is by far looking much better than gold, and it does look like it still wants to trend up higher towards this $29 price target. We will have to go back through resistance at 27.5 now that we have closed below that level. On Bitcoin, we continue to see selling and we're currently trading below the 20 simple moving average. We're developing some bearish trending slowly but surely, and it's still possible Bitcoin's coming back down to tag the 50 EMA and test it as support. That's going to be a price target of about $41,500 now. And I don't want you getting too overly bullish on Bitcoin because it's also finishing out a fifth wave and likely going into a deeper correction. These corrections could easily last a month or longer, so don't get too bullish and don't get FOMO like you have to get in Bitcoin now or it's going to $200,000. That's simply not the case, and we have to finish out these correction cycles before we can go any higher. On Amazon, we went down negative 3.24% and we're blasting below support at $30.90. That's not what you want to see if you're bullish on Amazon, and there will be another potential support level just below at $30.30. However, as you can tell from these charts, the tech sector is still seeing a lot of selling, so I don't want you getting too overly bullish until we find a bottom and we see where the market stabilizes. On Tesla stock, we went down over negative 8% today, and we did close below that support level around $690. It does look like we could potentially test the 618 level yet again. However, it's also possible that we're seeing the bottom in these stocks and we're due for that relief rally. So watch support below at 618 if we continue to see selling, but if we do start to bounce, it's time to start looking above for resistance levels around $750 and $780. On Apple stock, we continue to see selling going down negative 3.48% today, and this just shows you how badly the tech sector is getting beaten up. Apple is currently closing below support at 121, and Apple could come all the way back down to 114 before ultimately finding support, finding that bottom, and getting ready to head higher. So there's still more potential downside in this market, but if Apple does hold up around the support level and starts bouncing from here, it is possible we could start heading back higher. All of these resistance levels above at 124 and 126 are going to be a struggle for Apple to break through, so don't expect some crazy rally where Apple's just going to go back to $131 without any resistance. The tech sector is very beaten up right now, and it's going to take some time to heal it before people are willing to jump back in. On the financial sector, we went down negative 1.82% today, but we're still holding up above the positive sloping 5 EMA with a very strong bull trend. On industrials, we closed just below the 5 EMA, but we're still in a very strong bull trend, and it's possible industrials are going to continue to start trending higher. On the energy sector, we closed down negative 1.93%, but we're still holding up above the positive sloping 5 EMA with a very strong bull trend. On healthcare, we went down negative 1% and we're back to closing below the 50 EMA. So the healthcare sector looks just like the tech sector, and it's still showing a lot of weakness. So going back to the S&P 500, keep in mind that we still do see bullish sectors in the financials, industrials, and the energy sector. It's not like this market is going bearish across the board. We still see strength in the Dow Jones, and we're still going through that tech correction, which is also dragging down the S&P 500. Remember that the Spy Etf is over 30% tech sector, so in a weak tech sector, we're not likely going to see the S&P 500 forming new all-time highs. We just need to be patient, let this correction play itself out, and be very picky with our trades that we're making. A lot of the trades we're doing on the Discord server are in and out, and we're buying on support and we're quickly selling at resistance before the market can get too volatile. It's very important to stay disciplined, and it's very important to manage your risk in these situations. So don't get too leveraged and don't go in the market too heavy if you're not sure what you're doing. If you're looking for a disciplined trading community, come check out the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of this video. Alright, next up is our sole hot stock of the night, which is Lockheed Martin, ticker symbol LMT, and we did see Lockheed Martin getting sold off today, going down negative 1.4%. We've now hit both of our price targets above all the way up to 348, and now we're seeing some selling and we're going down and we're finding support just above this 340 level. Now keep in mind, this support level could hold up at 340 or we could come back down and retest 333. But we've now hit two price targets. We only have one price target outstanding, which is still up here at 357. Of course, since that's price target 3, it's going to take a lot longer to get there. However, you want to use these support levels as potential opportunities to load up on this stock if you want to trade it higher. Now, because we are back below price target 1 and 2 since we've hit them, remember those levels are still going to be resistance. So continue to watch resistance levels above at 344 and 348. If you're going to hold this stock all the way up to 357, be prepared to hold through those resistance levels. So remember, if you want more hot stocks daily, come check us out at the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market. Remember to stay patient and disciplined during these corrections. And as always, I will see you in the next episode.